Hello students, welcome back to 9th session on consignment account. Let me continue with problems on consignment. Let me look at problem number 6. Anand of Bangalore consigned 500 toys to Bhaskar of Mysore to be sold on consignment basis. The cost of one toy was rupees 200. Anand paid rupees 5,500 as freight, insurance and received 40,000 as advance from Bhaskar. Bhaskar paid 1,000 as octroi and carriage, rupees 1,500 as rent and rupees 1,200 as insurance. 410 toys were sold by the consignee for rupees 1,10,000. He is entitled to a commission of 5% on sale. Prepare necessary ledger account in the books of Anand. So there is no information relating to abnormal loss. So, how many toys were consigned? 500. There was no normal loss, there was no abnormal loss. Full 500 was received by Bhaskar being a consignee, but he sold only 410 toys. So there is a closing stock to the extent of 90 toys with Bhaskar. So we need to calculate closing stock. So what they asked, prepare necessary ledger account in the books of Anand. Necessary ledger account in the books of consignor means consignment account, consignee's account, goods sent on consignment account. So let me read one by one. Anand of Bangalore consigned 500 toys to Bhaskar of Mysore to be sold on consignment basis. So whenever goods consigned, the journal entry is consignment account debtor to goods sent on consignment account. So have format of all three accounts: consignment account, consignee, that is Bhaskar's account, then goods sent on consignment account. First journal entry, consignment account debtor to goods sent on consignment account, 500 into 200, 1 lakh. This will appear on credit side of goods sent on consignment account as by consignment 1 lakh. First sentence is over. The next sentence, Anand paid rupees 5,500 as freight and insurance. So Anand means consignor. When consignor incurs expenses, journal entry, consignment account debtor to cash, in bracket you write for what this. So in amount column it is 5,500. Only in consignment account this will appear. We are not preparing cash account. Then he received 40,000 as advance from Bhaskar. Whenever amount is received by consignor from consignee as advance, journal entry is cash account data or bank account data or bills receivable account data to consignee's account. So they have not specified whether the amount is received in cash or through draft. So that's why we are assuming it was sent through draft. Journal entry, you can write cash also, no problem. Bank account debtor to Bhaskar account 40,000. This is what you need to write. The next one, what's the next one? Bhaskar paid 1,000 as octroi and carriage, 1,500 as rent and 1,200 as insurance. When consignee incurs expenses, journal entry is consignment account debtor to Bhaskar account. Write the name of each and every expenses incurred by consignee. Total is 3,700. This will appear on credit side of consignee by consignment 3,700 or 5,500. It is 5,500. Sorry, it is 3,700. So the next one, what's the next you have? 1,500, 1,200, 410 means 3,710 I feel. It is not how much it is. 1,200 and 1,500 and 1,000. Sorry, 3,700. Correct. The next one, 410 toys were sold by consignee for rupees 1,10,000. Whenever consignee sells the goods, journal entry, consignee's account debtor to consignment account. Consignee's account debtor to consignment. So on credit side of consignment, Bhaskar's account 1,10,000 in consignee's account. In the books of consignor, Bhaskar account debtor to consignment account 1,10,000. Then what else we have? He entitled commission of 5% on sales. Journal entry, consignment account debtor to consignee's account on sales 1,10,000. Calculate 5% commission. It will be 5,500. On credit side of consignee account by consignment 5,500. Bracket nalli baribodu commission due anta. So then what else we have? He is entitled to get a commission of 5% on sale. That's over. That's all. No other information is there. So now we know that there is no abnormal loss or normal loss, but there is closing stock. We need to calculate closing stock. Now value of closing stock. Have a note. So cost price of 90. How you got 90 toys? We sent, means consignor sent 500 toys. Consignee sold 410 toys. There is 90 toys in stock. 90 into 200 is 18,000. Plus proportionate non-recurring expenses incurred by consignor. Consignor incurs 5,500 as freight and insurance. It's an example of non-recurring. So 5,500 for 500 toys. How much for 90 toys? It will become 990. Then plus proportionate non-recurring expenses incurred by consignee should be added. So consignee incurs what and all, you just see. 1,500 as rent, 1,200 as insurance, 1,000 as octroi and carriage. So of which 1,000 only comes as non-recurring. So 1,000 is for 500 toys. How much is for 90 toys? When you cross multiply, it will be 180. So the total of consignment stock is 19,017. How to calculate value of closing stock? Cost of closing stock plus proportionate non-recurring expenses incurred by consignor plus proportionate non-recurring expenses incurred by consignor. So when there is a consignment stock, journal entry is consignment stock account debtor to consignment account. We have come across this many times. So 19,017. So that account get closes, you need to calculate whether debit side is more or credit side is more. Debit side is less, credit side is more, so there is a profit. Journal entry, consignment account debtor to profit and loss account, which is a balancing figure. Then how to close Bhaskar's account? There is no information in the problem whether Bhaskar settles the account or not. In all previous problem, he settles the account. Such type of sentence is there. Either you can show it as a balance or you can assume Bhaskar settles, consignee settles. Here assumption was made, consignee settle. If you assume that he has not settled, you have to write it as by balance carried. If you assume that he has settled, as there is no sentence in the problem, journal entry, bank account debtor to Bhaskar's account. It means we have, consignee settled the amount to consignor by paying in terms of draft. So balancing figure is 60,800. So that consignee's account get closes. Now we need to close goods sent on consignment account by transferring it to trading account. So goods sent on consignment account debtor to trading account 1 lakh. So that this account also get closes. So this is how to solve problem. See, in this problem there is no information relating to abnormal loss. So we are free. It was there in previous problem. There is information. There is no information with regard to closing stock, but we need to identify whether closing stock is there. Yes, there was closing stock. So we have to calculate value of closing stock. Again, there is no information relating to whether consignee settles the amount to due. So we assume that whatever balance is there in consignee, he settles it through bank draft. That's why we passed a journal entry, bank account debtor to consignee's account. We assuming that consignor received draft for final settlement. So this is all about 6th problem. So let me move towards 7th problem. I will just read it. Ramakrishna Oil Mills consigned 500 tons of ghee to Malhotra Brothers, Chennai at 80 per kg. Each tin cost at 80 per kg, rupees 80 per kg. Each tin cost rupees 1,320. Ramakrishna Oil Mills paid 500 for carriage, 2,500 as freight, 2,000 as insurance. Means consignor incurred expenses. During transit, 20 tins were accidentally destroyed, for which insurance company paid directly to the consignor 12,500. This sentence was not there in the 5th problem. In 5th problem at the end I explain. In case if you get amount from insurance company, how it will be recorded in abnormal loss. It is there in this problem. In 5th problem, nothing was recovered from insurance company as far as abnormal loss. But in this problem, it is there. The damaged goods were sold by Malhotra Brothers at rupees 11,000. See, damaged goods went to consignee. Consignee sold it for 11,000. After 3 months, Malhotra Brothers reported that 400 tins were sold at rupees 1,500 per tin, and their expenses, Gordon 15,000, labor 5,000. They incurred expenses also. They sold 410 tins also. Malhotra Brothers entitled a commission of 5% and 1% del creda. See, for the first time we are coming across del creda commission. We will see how to do it how to calculate it. The consignee also reported loss of 33 kgs due to leakage. See, for the first time in a problem we have abnormal loss 20 tins accidentally destroyed during transit before reaching to consignee. And there is one more information in the problem. After goods reaches to consignee, there is a leakage of oil, so there is a normal loss. Leakage is expected loss. So there is a normal loss of 33 kgs. So this is a very good problem where we have abnormal loss, then recovery of abnormal loss from insurance company where we have normal loss. We have closing stock also. How many tins were sent? 500. How many tins were lost on transit? So 20. So 480 reached to consignment. Out of 480, he sold 410. Try to understand. He said sold 410. 480 minus 410 means 70 tins. Out of 70 tins, 30 tins leakage. Again, 40 tins are there with the consignee. So there is closing stock. Try to understand. This is a full pack problem where you have all information. Abnormal loss, normal loss, closing stock, then the recovery of abnormal loss from insurance company. We'll discuss so slowly, particularly next session. So I have read to make you to prepare with an intention of preparing you for the next session. I read this problem and I explained. Again, I will re-explain particularly next session. Till that, take care. Thank you.